Good morning, everybody. I hope you're all doing well. It's Dana Trading here. I just want to check in real quick as we start the morning. It's just about 30 minutes into the trading hours on this trading day. Right. In front of us here, we're looking at SPY this morning. After actually, if we take a look at the chart, we are a little bearish. There's a bearish. The day seems to be a little red, but that's not a concern here. I'm expecting a U-turn here in a moment. As we see from yesterday, we had a very strong run to the bear, and we are kind of I think, or not just think, but I believe we should be having a little bit of a reversal this morning, a little bit of a pullback actually this morning, because if we take a look here, you do see that right here where we're sitting is a very strong support and support level, and we have come and failed to. We are actually trying to retest that level, which is where we closed yesterday. We are retesting that level this morning, but it seems like we're having a rejection from that, so that is creating a double bottom right there. And of course, if it creates a double bottom, we do know that double bottoms do bring these characteristics where we come down, we tease to go up, we come back down, and then we go up. Okay, that's I think that's what's happening here, and we have actually just received. We have just gotten our buy signal right here. As I talk, we've just gotten our buy signal, so I think we're pretty good for a call option here right now. If I change this from this to my trading candles, you will see that we do have a buy signal. This buy signal is strong enough actually, because first of all it's white in color, but it's above the triangular moving average, even though we are still in the very bad zone for bear pressure or bear momentum. What will determine that, what will help us a lot, is the next trading candle. If the next candle forms up without a wick at the bottom and it's orange, and not orange, and it's yellow. If the next candle is yellow without a wick at the bottom, that's golden. Okay, that means we should be able to trade without concerns or without issues. So keeping an eye on that. We should be pretty good here. Okay, let's check. Yep, that is what I'm talking about. That's what I'm talking about, guys. We have the day is reversing just about now. The day just reversed. The pullback has just begun, and just like that, I would enter this trade right here. Oh, I'm actually entering this trade for a few pips here. Probably we do have this, we do have that. That's the double bottoms. We are the only thing that's holding us back is breaking this wick here on at this breaking this that level there. Once that's broken, okay, so the sky is the limit. So what I'm looking for, what I normally look for here is the candles to be on one side of either the TMA, which is the red line here, or the candles to be on one side of both the blue line here and the red line there. Once we are on either side of that, we take a trade according to that direction. But also we only trade candles of specific colors. We trade candles which are blue, which is that, and then we trade candles which are yellow. If I show you on another time frame, you will see that as an example, the white candle is our entry always, and then we trade the yellow candle. But also the chart must be above one or both of the lines. With that in mind, let's head back to the chart. Let's see what's going on. We still have that wick which we haven't broken through, and by the wick I'm talking about this right here. Okay, once we break that, we should be able to rally above that resistance level. Once we break that resistance level, we should be able to rally up, and that is about to be broken in a moment here. And again, if you haven't noticed, I am trading a 7-minute chart. My 7-minute chart things might look a little different than the way things are looking on yours. I do have on my right hand side, I do have, if you take a look at the historical data, you will see that right here as an example, this is a similar situation which is happening right about now, right here. This is a similar situation. We had that run down, okay, run. Everything is below, and then we have, okay, we have that candle print. We have that kind of print right here, and then that kind of was our entry for the trade. If you took that trade, you should have done well. So meaning that once you see that, you wanna do something like this. Buy on next candle, put your stop loss right below a distance below the previous swing low or below the previous doji right there. Once you have your stop loss right there, you can set up your take profit any way you want, and that should still be a winning trade regardless. You don't have to ride the whole trend, but if you know what you're doing, you can stay in the trade. So pretty much, this would be a very clear big win here. You get your buying signal, you enter the trade, and you're good to go. Same thing, same story here. You are below the lines. You're below the lines. You get an orange candle followed by a blue one. You enter your short or you enter your puts, and you're good to go. Back on our current candle today. Okay, back on this morning, we have broken above that line already. If you haven't noticed, the tiny dot ones over there indicate the actual price. The body here is just the average of those price. So we have just broken above that, and we are doing pretty well if you look at it from a traditional candle. Okay, we're doing pretty well. So we broke that, and we broke that, and so yeah, the the pullback on that from that bull is pretty good. If you take a look here, you see that things have turned green, and things are turning more green, which is good. Okay, so with that in mind, let's go back. Okay, I only take trades if the candles cross on one side of the lines and stay strong on that side of the line. Now the next candle is even going to be more amazing. Look at how big the size of this candle is. That just indicates that there's enough volume. But also you see that on the bottom here where this histograms are, the histogram is fading, which means the selling momentum is dying off, but the buying momentum is coming in, and there's enough liquidity which should be good enough to push the market a little bit on a bull run. So we are expecting to see that in the next few, and once we see that, we should be good to trade. We should be good to trade this, and you can trade whichever one you want. But considering how volatile this is, I wouldn't really stay in the trade for that long. If you get a clear entry, enter the trade, get green, get out. That's simple. The 3Gs: get in the trade, get green, get out. That's the simple. It's that simple. Okay. With that in mind, check me back later for more updates on how you can enter a trade and how you can exit a trade, or how you can place a trade, or how you if you just want to analyze a chart, how you can do that. Because I've covered that in some other similar videos, which I will link below here or above right there. You can take a look at those videos. But these trades have been those analysis have been very helpful for a lot of other people. So you want to check that out. You don't want to you don't want to miss those, because they are a very educational content for analyzing the trade. And again, here comes our next candle, which is printed in orange. Okay, in yellow. The next candle printed in yellow, there's no wick at the bottom. That's just a strong volume, and we are up, guys. All right. Stay tuned, stay strong, happy trading. Dinner trading, in and out. Over.